It's David Bloom is Global Head of Currency Strategy at HSBC Treasury and Capital Markets. David, good morning. Thanks for joining us.
Sure.
I suppose we shouldn't be too surprised by that Moody's downgrade of Portugal's debt.
No, not at all. I mean, not surprised at all. And it's based on Portugal getting emergency funding. Otherwise, they said it would have been much worse. But it seems that the mechanism in place to support these countries is there. Hence, the reaction is completely different to a year ago where the euro was in free fall because of these issues. So it's all eyes on the ECB on Thursday, and that's the real momentum behind the euro at the moment.
Is it a done deal, David, that Portugal gets the bailout, and if so, when?
Yeah, I think it's a done deal, but that's a good question, the when, because the government's not really in place to ask for it. So we'll have to watch that. And this isn't the beginning, this isn't the end. You know, this situation will roll on. And at some point, when the ECB has raised rates, goes on pause, and we focus back on the fiscal side, I think the euro will retrace back to around 135.
Does the ECB pause then after Thursday? I mean, is one token rate hike enough?
Well, I think it's one and a pause. I don't think it's one and done. I've been through these one and dones, and then it's two and through, and then 3 and 4. So they will continue to raise rates, but I don't think it'll be a very aggressive tightening cycle. But I think the market's got a central point, that is Thursday. I think if the US government can not shut down and the ECB is a bit dovish, I think the euro will retrace. But those are big ifs. Yeah,
they are. Other matters, David, of course, are words from Ben Bernanke yesterday. He said the Fed will act if inflation is more than transitory. The dollar got a bit of a boost from that. What did you take away from these comments?
He was dovish. I thought he was dovish, and what I've taken away over the last 5 or 6 days is that this is the Bernanke FOMC, that everybody can say whatever they want. They don't speak with one voice. It's not like controlled in a way it was by Greenspan, and all the speakers have gone out and said different things. So you've got to keep your tabs on the different speakers. It's becoming more like the MPC, where Mervyn King is just one vote and Bernanke is just one vote. So he doesn't carry, like the way Greenspan did, the whole committee. So it's slightly different flavour, but I thought he was dovish last night.
I mean, you were saying a minute or so ago how the euro, if the ECB pauses, could come down to 135.
Yeah.
How much part of that thinking is the dollar side of the equation?
Well, yes, the dollar side of the equation is that the end of QE2 is on its way. It's ending in June, and we're all talking about exit strategies and what the Fed may or may not do. And I think the ultra-dovishness of QE2 is going away, and meanwhile the ultra-hawkishness of the ECB might wane. And so if you take those two together, that should mean that the dollar picks up a little bit. You know, there's a little bit of fight left in the old dog, I think.
And there certainly seems to be a bit of fight left in the dollar against the yen, because it's approaching a 6-month high right now.
Well, the yen is dead. I mean, the yen, through trying to create stability, they've created instability. There's nothing more a trader loves than a free trade. In other words, protect my downside and give me unlimited upside. In other words, I sell the yen and I buy South Africa and Brazil and Turkey and Australia. And if my yen position goes wrong, the G7 will be there to protect me. And if it goes right, happy days. And so I think they've created a bit of instability through trying to...
How low could it go then, the yen? I mean, as we said, 84.40. I mean, where are we heading?
I mean, I think the yen's heading back to about 86 or so, the way the market's trading. And if it goes the other way, they will intervene. So I think they've created a kind of carry scenario, a yen carry scenario, to make us come back.
Are you saying, David, there's easy money to be made out there?
Well, I wouldn't say it's easy. Nothing's ever easy. But I think as far as risk-reward is concerned, they have skewed it away from where the risk is to more towards reward. So the whole market thinks we sell yen, we buy these risky, high-yielding currencies, and if it goes horribly wrong, the G7 will bail us out. So the downside is limited and the upside is unlimited. They've created a little monster here, I think.
David, always a pleasure. Thanks a lot.
Thank you very much.
David Bloom there, HSBC Treasury and Capital Markets.